All eyes are on September's Fed meeting, everyone. Over 92% of traders, they're expecting a 50 basis point cut at that meeting. After weaker than expected economic data reignited recession fears. To discuss, Yahoo Finance's market domination co-host Josh Lipton is here with us in studio. Hey, Josh.
All right, Brad. So investors now have new questions about the overall health of the U.S. economy following that weak July hiring report we got last week. That sent the stock market tumbling, and the pressure continues into today's trade. All three major averages deep in the red right now. Investors concerned, is the economy just cooling, or are we now facing the possibility of a more serious economic downturn? That debate has heated up about the Fed's role in all this, of course, with the question being asked, did central bankers wait too long to lower interest rates? Yes, our Fed policymakers suggested they could cut in September, but some economists now think that the Fed should cut by a more aggressive half point rather than a quarter point. As of this morning, markets were pricing in a more than 90% chance that the Fed cuts by 50 basis points by the end of its September meeting. That is up from an 11% chance just the week prior, according to the CME Fed Watch tool. I checked in with Joe Brusuelas, chief economist at RSM. He says the case for a supersized point cut has now been bolstered by the market action we're seeing. If this continues, he says, and we get another flat reading in the CPI and or PCE, the case even for an inter-meeting supersized rate cut, he says, would be on the table. What does all this mean for consumers right now? The yield on the benchmark 10-year is back well below 4%, creating the conditions, Joe says, to support improved lending, home buying, and auto purchases. It also, we know, brings down the cost of purchasing durable goods, things like washing machines and dishwashers. And Joe points out, tends to drive down the cost of variable interest rates on credit cards. But of course, at the same time, we now have a lot of new questions front and center for consumers and investors. Does the stock market keep reeling? Does the labor market go from cooling to cold? The economist Claudia Sahm recently told Yahoo Finance she is, in her words, very concerned that we could tip into a recession, Brad.
All right, excellent breakdown and conversations with some of the people tracking this closest. Josh Lipton, appreciate it.